Good morning. Welcome to Stock Market Today. It's Thursday, July 30th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where we get a lot of the content for this show. Also gives you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were higher on Wednesday on the heels of a continued dovish tone from Fed Chairman Powell. All sectors closed in the green, led by energy and financials. Staples and utilities lagged the broader tape. Treasuries were mostly stronger with the curve steepening. Dollar was weaker again against the major crosses. Gold finished up 50 basis points for an eighth straight day of gains. WTI crude down 60 basis points to the good. So we get to the desk this morning. Futures are under pressure, down about 1% after Asian markets were mixed overnight. Japan, Hong Kong, and China all finished higher. European markets are under pressure. Treasuries are stronger with the curve flattening. Dollar is stronger on the major crosses. Gold is down 50 basis points after that 8-day winning streak yesterday. WTI crude down 1.5% to kick us off on a Thursday morning that starts the day, at least, with the S&P 500 above that 3250 resistance level. Will it hold this time is the question. So far, futures are saying no, but it's a long day ahead of us, and futures are not always indicative as to how the day will turn out. Down below 3,000 to 3,100 remains support, and we might actually have to start thinking about bumping that up to 3,150 as the 50-day moving average continues to move higher. Should 3,000 break, you have to think about 2,850 to 2,950 to the downside. Resistance 3,250 to 3,350 remains in place. The highs are in play if support holds, right? So no real change there, just some choppy near-term activity that we've been talking about. Small diversions still in play for that 13-period CCI, while Chaikin money flow remains bullish. So not a ton to say here, really. Ebbing and flowing back and forth, choppy trading on the day-to-day, but the bigger picture trend off the March 23rd lows remains in place. So continue to focus on your process, continue to focus on your risk management, which should be a really important part of your process. We've identified the key levels. Odds favor the February highs as long as we are above that support zone that we have been highlighting. So not a ton to say there in terms of change of views. We'll see what the roughly 1% decline in the futures this morning brings for the rest of the day. So our market in a minute. What are we writing about today? Dovish Fed comments send stocks higher along with inflation protection. We're going to take a look at tips a little bit later on in the show. Breadth metrics are mixed this week. Large cap leadership is going to be in focus as tonight is a huge night for earnings from those big tech leaders, just large cap leaders in general. And we'll take a look at the RSP, the equal weight S&P 500, and just some thoughts there a little bit later on. Futures point to a lower open today. Drilling in now on the power bars for the major indices, the Dow remains bullish at 8 to 6 after tacking on 60 basis points yesterday. S&P 500 up 1.2%, 166 to 75, bulls to bears there. NASDAQ, an inline performer, 38 to 5, bulls to bears. Small caps outperformed, 621, 286. Bonds down ticked to send yields slightly higher. And energy was your best group yesterday, up a little over 2%. And the power bar ratio for energy has been improving of late. In fairness, I'm not there yet, but it's improving. According to the Chaikin power bar, small cap stocks and large cap stocks are remaining bullish. Major markets across the board are mixed. Let's hit our stocks, plural, of the day. I think what happened yesterday from the Fed commentary was just further admission that there is anemic economic growth. And when economic growth is scarce, investors tend to bid up growth stocks. Now, we've had this value growth rotation going on here, which we think is going to reassert in favor of growth. So I wanted to do here is just kind of run a screen for value stocks that are weak, right? These are stocks that have predominantly a bearish rating here at Chaikin Analytics that are currently overbought based on that indicator that we use, but below the long-term trend line to go with weak money flow and weak relative strength. So you could take a look at this screen here that I ran. You recognize Cisco. We talked about this one recently. But this could be an opportunity for, if you own any of these names, to maybe lighten up. If you're looking to trade to the bearish side, to look at potential opportunities there. So I wanted to run that screen for you. Flash it here if you'd like to take a screenshot. Our sector tracker now, movement of the major sectors over the last 5 days. REITs at the top of the list along with staples. That has a defensive feel to it. Financials, counter trend rally on a relative basis. Utilities, industrials, healthcare are also higher over the past 5 days. Lower names over the past week of trading: energy, materials. We still like materials, just giving a little bit back here after a big run. I dislike energy. Discretionary, comms and tech are your kind of your growthier, more aggressive type areas of the market. Those are at the bottom of the list as we've seen this rotation continue to play out. Our industry in focus today is bank services, which has been an absolute mess over the past 6 months, having underperformed the S&P 500 by 29.18%. Power bar ratio is strong at 31 to 15. It ranks at number 13 of 21 subsectors, moving up one slot over the past week. So some very bullish names here. Simmons First, SFNC, Bank of New York, BK, and PacWest, PACW have very bullish ratings. But it's hard to get excited about the group in general, and I will give full disclosure. I have a bearish position on in KBE. Take a look at the fund here. It has a bearish ETF rating despite being above the long-term trend line, which is still declining. Chaikin money flow solidly bearish. Overbought, oversold indicator turning down in an overbought position for a fund that has been persistently underperforming the S&P 500 since the beginning of the year, right? So we have a bearish fund, underperforming, bearish money flow, overbought in the near term. So I have a bearish options position on in KBE. I'm not exclusively married to it. I just kind of like the setup here. I think that the path of least resistance is lower for banks, and I've done it in a risk-defined way, as I always like to do with bearish trades, by looking at option setups. So that's how I've kind of set that one up for myself. But it's hard to get excited about the group, especially with the prospects of rates staying on the floor for a while longer. So KBE, tough to get excited there. Taking a look now at what is trending. Yesterday's S&P 500 movers and shakers, our gainers and losers. On the gainers side of the board, L Brands, LB, up 35% yesterday following their positive pre-announcement. Obviously, one of the beaten down retailers that where sentiment was completely washed out, and their positive pre jacked the stock to the upside. I do note that it did catch a downgrade here today. By here, I mean on the street. Stock has a neutral rating at Chaikin Analytics. AMD up 12.5% following their earnings announcement. CHRW, CH Robinson, up 9.33%. Earnings announcement leading to that pop. Stock was downgraded on the sell side here today. Gap probably goes along for the ride with L Brands. Nothing company specific that I could see driving trading in that name. Same with Western Union, 7.5% to the good, but no company specific driver there. On the loser side of the board, it's predominantly earnings related. Seagate, a very bearish stock, down 8.7% following their earnings announcement. Weighed on the hardware part of technologies and some of the other storage names as well. ADP, neutral stock, down 6.5% following their print. LW, nothing company specific to drive trading there, down 4%. eBay, down 3.23%. It's a bullish stock at Chaikin Analytics, but their earnings report disappointed. And American Airlines down 3%. Nothing company specific to drive the trading in that name. Let's take a look at the charts now. Messed up the header here. Let's change this to breadth and come back to you. So taking a look at breadth from a few different perspectives. First, as we always do, the long-term trend. Percentage of stocks above their 200-day moving average at 56%, kind of in line with where it was last week. That divergence is still in play. And Again, divergences are warning signs, right? We talk about them as it relates to momentum indicators. We could talk about them as they relate to breadth here as well. They're warning signs, right? They kind of point to the potential for trouble, but ultimately they have to be confirmed by a breakdown in price. The opposite is true when we have bullish divergences. So we're watching the divergence, especially in light of the fact that it was a big divergence here that preceded the big decline in the market back in February. So we're always mindful of them, but recognize that they need to be confirmed. There needs to be a trigger in price, right? Price is the ultimate determining factor. But I will note that it's kind of interesting that when the market got to the top of the range that it's been in, this being the S&P 500, this indicator was up here around 65%. Now we're back at that level, right? The S&P is back at this level, but this indicator is, roughly 10 percentage points lower. So that's something to keep in mind. The same goes for the more intermediate term. Percentage of stocks above their 50-day moving average. It's a solid number at 75, but we're mindful of the divergence. So the breadth metrics are okay. The divergence is what we're paying attention to. And again, we're going to look for what we would wait for is a price confirmation. The advanced decline line, though, continues to trade near its highs, which is confirming price, right? So the breadth picture is somewhat mixed. We can drill down a couple of different ways as well. Not shown here, the shorter term metric, the percentage of stocks above their 20-day moving average, still fairly solid at around 80%. Again, a small divergence in play there. So the short term, still solid as well. So we're paying attention to the divergences. A couple of other ways that we look at breadth. We look at the percentage of stocks that have bullish or very bullish ratings in our model. And what's interesting here is that has spiked to about 34%. So 34% of the stocks in the S&P 500 with bullish or very bullish ratings based on our 20-factor model. So that 34% is up near the high. So levels that have kind of marked choppy near-term trading. So that kind of lines up. We have this choppy view of the market, right? Bigger picture trends still in place, but near-term choppiness does remain a theme. So you have to factor that in based on your time frame. If you're an intermediate or longer term trader, the trend is still very much intact. If you're shorter term, your trends are a lot more choppy and flatter. As you can see, the S&P 500 is roughly flat over the past, call it, month and a half of trading, really since about the June 9th time frame. So just something to keep in mind as you're going through your work. New highs for inflation protection, right? So the Fed remaining dovish. One of our views has been, a lot of people have heard me talk about it, is this prospect of rising inflation to go along with slower growth. We identify that in a few different ways. We can look at commodity prices, which is at the bottom of this chart. You can look at commodity currencies, things like the Norwegian krona, the Aussie dollar, the Canadian dollar, all breaking out relative to the US dollar in favor of dollar weakness, commodity currency strength. Right. So to me, that paints a picture of the potential for rising inflation. And you can see TIPS here, the iShares TIPS bond ETF, going out at a new high yesterday, above the 50 and 200-day moving averages. Now overbought in the near term, but notice that new high is playing out and the strength in the TIPS is playing out as DBC, the commodity ETF, has carved out a near-term uptrend with a series of higher highs and higher lows. So that's our view, right? And it kind of gets back to why we're bullish on materials, why we have a bullish view on precious metals, though they are extended in the near term. So you can kind of start to connect the dots, the intermarket analysis, painting the picture there. And finally, it's a test tonight for the large leaders. This is the RSP, the equal weight ETF. Notice that the equal weight S&P 500 is not testing its June highs the way the index is, and it continues to underperform relative to the SPY. So what does that tell you? That tells you that leadership is concentrated in the largest names. And then tonight, after the close, we are going to hear from Google, Apple, Amazon, and Facebook. So it's a huge night for that leadership theme. That's going to wrap us for today. Take us for a test drive. I'm back with you tomorrow.